Okay. Good morning, friends. Let's continue with this problem. This is what we were doing, relevant costing approach to variance analysis. I had told you to complete the conventional method of it. I'll just take the answer of that and then I'll explain you the other methods. Just give me a minute. We had very limited variances. We didn't have any price variance and all in that question. It's more of the quantity and the efficiency part. Just give me 2 minutes. We were doing conventional method. In the conventional method, what was the budgeted profit? 1,12,000. I will have material usage variance. How much was that? Okay, I'll put minus 8,000. Labor efficiency variance. How much? 3,200. Fixed overhead volume variance. I'll write it as volume itself. Or give me the efficiency and capacity. Let me write efficiency 1,000 and capacity 3,000 and sales margin volume variance 11,200 and your actual profit was 83. 84,800. Then is there anything wrong here? 8,000, 3,200, 1,200, 3,600, 11,200. Can you look at the answer? I wanted you to do the reconciliation at home. How much efficiency is? Written, no? Okay, sorry, variable over. Okay, this is what we had done in the last class. I had told that I'll continue with that problem in today's session. So we have done with conventional method of reconciliation. I have 3 more methods in relevant costing. They are saying materials are scarce, labor is scarce and no scarce inputs. So I'll explain this and then you can note it down. Material, labor, no scarce. Listen for some time, I'll explain this and then you can note it down. Go to material usage variance and tell me how much material we have wasted. What was the standard quantity and what is the actual quantity? So 2,000 kg we have wasted. 18,000 is the standard and 2,000 kg we have wasted. Okay, create a table like this. Please create a table like this. I'll have to give some explanation and then we come back. Create a table like this. I had done this in the last class. We did not complete it fully. We wanted to I want to continue it in the current class. We didn't complete this. Just write this This is a conventional method of reconciliation, and we have relevant costing method of reconciliation wherein 3 items are scarce: material, labor and no scarce inputs. Done. Come down, notes. Point number 1. The product is earning a contribution of rupees 80 per unit. Rupees 80 per unit, 56 plus 24 of rupees 80 per unit, OR rupees 8 per kg of raw material, OR rupees 8 per kg of raw material, in bracket 80 divided by 10 kgs, rupees 80 per kg of raw material, rupees 80 per kg of raw material, so rupees 8 per kg of raw material, OR rupees 10 per labor hour, OR rupees 10 per labor hour, rupees 10 per labor hour, in bracket again 80 divided by 8 hours. Now, if you do your relevant costing analysis or marginal costing analysis, we do a statement of ranking. In the ranking, we calculate something called as contribution per unit of limiting factor. So, if material is a limiting factor, every kg of material is worth 8 rupees opportunity cost, separate worth of 8 rupees. Every labor hour is worth 10 rupees. Okay. Now, listen. How many kgs of material we have wasted? 2000. Now, each kg of material is going to be 4 rupees worth, and on top of that 4 rupees, another 8 needs to be added. This 8 is an opportunity cost because it's a limiting factor. When it's a limiting factor, you cannot waste it. If you waste it, you don't only lose 4 rupees, you also lose another 8 rupees. 8 rupees is your opportunity cost, because in the market demand is there, but you are not able to sell it because you became inefficient in the usage part. So, this 2000 kg into 4 plus 8. Into 4 plus 8. Listen for some time, no need to note it down. I'll tell you to note it down. 2000 into 4 plus 8. This will continue to be same. This will continue to be same. There is no concept of fixed overhead variance in relevant costing, because relevant costing doesn't consider a fixed cost as a relevant item. How many units the company wanted to sell? 2000. Now, with 20,000 kgs of raw material, I should have ideally produced 2000. I have not produced 2000 and I produced only 1800. That extra 200 kg is there, no? That loss, the extra 200 units is a loss because of inefficiency of use of material, because you did not use the raw material properly. So, salesperson cannot be held responsible for that. I cannot go and tell him that, boss, you did not use the material, you did not sell the product. He is saying the company has not produced it. Why am I not selling it? I am ready to sell it. You should have produced and given it to me. And the issue is we have wasted raw material, so we are not able to produce it. In the process, what we did is we should have ideally produced 2000 units, but because of our inefficiency, we ended up wasting the raw material, and so sales is 0, and I end up getting the same 83,600. I'll give you time to note it down. I'll give you some more explanation. The concept is every kg of material wasted is equal to 12 rupees. Every kg of material wasted is 12 rupees. Why 12 rupees? 4 rupees of direct cost and 8 rupees of opportunity cost. What is that 8 rupees? Fixed overhead and contribution loss. That's why sales margin and fixed overhead is 0. Now when it comes to labor, this continues to be same. This 8,000 will continue to be same. How many labor hours we wasted? What is the standard hours and what is the actual hours? Okay, actual. So we have wasted 400 hours. 400 hours into 8 is the normal labor cost and your opportunity cost is 10. This will continue to be same. This will continue to same. Now when it comes to sales margin, listen. How many actual labor hours we have utilized? 14,800 divided by 8. 14,800 divided by 8. We could have produced 1,850 units. We have produced only 1,800. Balance labor which is there, no, I did not even utilize. The reason for that could be the demand is not there in the market. Because if demand was there, I would have went ahead and produced it. After producing, I would have sold it. So we wanted to sell 2,000 units, but we have sold only 1,800. The gap of 200 is because of two reasons. One, inefficiency of labor. Second, inefficiency of salesperson. Inefficiency of labor is captured in labor efficiency variance. Inefficiency of salesperson is 150 units. He did not sell extra one. This could have been produced by the company. I did not produce it because salesperson did not give me any demand. What is the contribution per unit? How much the contribution per unit? 80. I'll give you explanation on this. Wait for some time. So this continues to be again 83,600. Last scenario. There are no scarce inputs. So if there are no scarce inputs, the fixed overhead part will not come anyway. Relevant costing. We did not sell 200 units and each unit we should have earned 80 rupees. We should have earned 80 rupees and it continues to be 83,600. Now I'll give you first explanation, then you prepare this table. Now write scenario 1, material being a scarce input. Scenario 1, material being a all the raw material is available in plenty, labor is available in plenty, you don't have any input issue, but demand is not there, so you did not produce. FOH is anyway irrelevant because that's what relevant costing says. Relevant costing as a rule says fixed overheads are irrelevant. So whether you produce, not produce, underproduce, overproduce, fixed overhead volume part, expenditure at least I can consider, but volume is always irrelevant. In which one? I'll come to it as I proceed. So, the material being a scarce input, right? Point number A. The company has sold 1,800 units. Company has sold 1,800 units. 1,800 units as compared to a budget of 2,000 units. As compared to a budget of 2,000 units. Budget of 2,000 units. Next point. We need to analyze the reason for the loss of 200 units. Reason for loss of 200 units, full stop. The same is provided below. The same is provided below. Same is provided below. Loss of 200 units and split it into 2. Loss of 200 units and split it into 2. Inefficiency of usage of material. Inefficiency of usage of raw material. In bracket limiting factor. Inefficiency of usage of raw material in bracket limiting factor, other side inefficiency of salesman, inefficiency of salesman. Raw material side, put arrow mark down. Material wasted equal to, material wasted equal to, material wasted equal to difference between SQ and AQ. Material wasted equal to difference between SQ and AQ difference between SQ and AQ equal to how many units, how many kgs? 2000 kgs. Put a arrow mark down. Units lost, 2000 divided by 10, 200 units. 2000 divided by 10, 200 units. Inefficiency of salesman, put arrow mark down. 0 units balancing figure. 0 units balancing figure. You cannot tell anything to the salesman. He will say, boss, I am ready to sell it. Why are you not producing it? And we are not able to produce because we have already wasted the raw material. So salesman is saying, I am ready to sell you. Give me the product, I will sell it. We are saying, I cannot give you a product because I have already wasted the raw material. Now, salesman side, but I have got a 0, put a arrow mark down. SMVV is equal to 0. Sales margin volume variance is 0. I cannot hold him responsible. Sales margin volume variance is 0. When it comes to this side, we have wasted 2000 kg and each kg the price is 4 rupees. In relevant costing you would have learnt about material being available, material being limited or labor being available, busy and cannot be substituted. The formula used to be lost contribution plus wages payable. The same concept was done for material also. Lost contribution plus the material cost. Now this material is giving a contribution of how much? 8 per kg. On top of that I pay 4 rupees. Because when I calculate 8, this 4 is already deducted. When you deduct it, you add it back, otherwise don't deduct it. That's what we learnt in relevant costing. So this part is material usage variance. 24,000 adverse. Material usage variance is 24,000 adverse. MUV 24,000 adverse. Any doubts on this? 24,000 adverse. Clear? Write a note. FOH volume variance is irrelevant. FOH volume variance is irrelevant. Is irrelevant in relevant costing. Is irrelevant in relevant costing. In relevant costing as there is no concept of absorption. Is irrelevant in relevant costing as there is no concept of absorption. Now go ahead and fill till the material part. Fill this table alone, the material scarce part. Then I will give you the notes on labor, then you can fill the labor part. Fill the material part. Clear? Any doubts on this? Can we proceed? Next, scenario B, labor being a scarce input. Labor being a scarce input. Labor being a scarce input. Loss of units equal to 200. Labor inefficiency. Salesman inefficiency. Labor inefficiency. Salesman inefficiency. Labor inefficiency, arrow mark down. Labor inefficiency, salesman inefficiency. Labor inefficiency, arrow mark down. Loss of time, difference between SH and AH. Loss of time, difference between SH and AH. What was the standard hours? How much?
14.
And actual hours?
48.
So we lost 400 hours. Difference between SH and AH. Lost 400 hours. Lost 400 hours. Any doubts on this? Difference between SH and AH, we have lost 400 hours. Loss of units equal to 1 unit takes how many hours? 8. $50 units. Labor efficiency variance equal to 50 into lost contribution plus wages payable. It's a scarce commodity which you are, it's a scarce input which you are wasting, then you have to pay lost contribution plus wages payable. What's the wages payable to per hour? 8. And what's the lost contribution per hour? 10. I'll make it as 400 hours, okay? 8 into 10 is the per hour. 8 plus 10 is an hourly basis, so I'll have to multiply this with 400. 8 plus 10. So labor efficiency variance is 7,200. Earlier it was only 3,200. He was saying I wasted something which is worth 8 rupees. Now we are saying it's not worth 8 rupees. You have wasted something which is 18 rupees worth. It's not an 8 rupee worth product which you have wasted. You have ended up wasting an 18 rupee product. Any doubts on this? Okay, now listen. Earlier I went to the salesman and asked, we did not sell 200 units. He answered me very simply saying that you did not produce. Now I go back to him and say that why you have not sold extra 200 units. He said, I take the blame for 150 units. I am not able to sell, but extra 50 units you did not produce. You have not produced those extra set of 50 units. So in the market, there could have been a demand potential available, but I am not inefficient fully. I am inefficient to the extent of only 150 units, because at best I could have sold another 150 units. So I have to be held responsible for that. You don't make me responsible for entire 200 units. You did not produce and you cannot make me responsible. Able to understand this? Because we have fallen short by 200 units. When I fall short by 200 units, I go to the salesman and ask why you did not sell 200 units. He said, don't ask me why I have not sold 200 units. I asked the production guy. He said that there is a demand only for 150. There is a possibility of only 150 units. So I am not able to sell 150 units. Balance 50 units is not my responsibility. You have to fix responsibility with someone else. So the salesman inefficiency is loss of 150 units and sales margin volume variance is 150 into 80 rupees per unit. The loss is 80 rupees per unit. We did not sell 150 units, so I can be held responsible for 150 units at the rate of 80. Contribution lost. So because I am inefficient, I have ended up losing 12,000 rupees. My inefficiency has cost the company 12,000 rupees. So I will be taking the blame for that. Any doubts on this? So go to the main table and you are done with your labor part. Any doubts on this? Then come, yeah. Standard hours is for 1800 units, correct. So you have wasted time. For the time you have taken, you should have produced more units. So the company had given me 8 hours per unit. I used 14,800, which means you can understand that loss of 50, like difference between standard output and actual output. For 14,800 hours, we should have produced 1,850 units. For 14,800 hours, whatever time you have taken, you should have produced 1,850 units. But you have produced only 1,800 units. That's the loss of 50. And each unit is worth some money. That's what we have multiplied with. Next, scenario C, no scarce input. Scenario C, no scarce input. You can write the loss of 200 units. The loss of 200 units is entirely, loss of 200 units is entirely due to the inefficiency of salesman, is entirely due to the inefficiency of salesman, and hence sales margin volume variance, hence sales margin volume variance will be 16,000. 200 units into 80 rupees. There is no concept of FOH volume variance in any of that. So the last part is like this. Any doubts on this?
All the cases are formally same.
Yeah, it has to be same.
How the fixed overheads is being adjusted is other thing.
How is?
How the fixed overhead variance is being adjusted.
It is getting adjusted here. No, this 24,000 is nothing but, see, 8,000 plus 1,200 plus 3,600 plus 11,200. Indirectly everything has gone there.
Individually we can't segregate like the contribution has been
Which one?
like contribution has been let's say like 8,000. Where that been registered here?
Which scenario you are talking about?
Last is
No scarce input. That is automatically gone to sales margin volume variance. Your fixed overhead expenditure and efficiency. Efficiency and capacity 4,800 got added to your sales. See, you see here, once you add these three, you will get the same 16,000. So your fixed overhead, see, there's no concept of fixed overheads being wasted. It either goes to your sales or goes to your material labor somewhere based on who has wasted the resources. I think you're still not clear.
I understood like overall I understood, but I was thinking like how it is gone adjusted here individually, you know, sir. Prices including material they say like 40, labor they say 60%. How?
No, so indirectly what happens is your fixed overheads we have added at this stage 56 plus 24, 80. A part of the fixed overhead and profit will go to material if you waste material. A part of your fixed overhead and profit will go to labor if you waste labor. 80 divided by 10 kgs, 8 per kg. This 8 per kg includes a fixed overhead of 3 per kg and a standard profit of 5 per kg. So it automatically goes there. Now the second part is saying, this anyway you can refer in the material, comment on efficiency and responsibility of the sales manager for not using scarce resources. We had these scarce resources, no, they have not been utilized properly. So they are saying, is the sales manager responsible for that? We did not use material properly, we did not use labor properly. Should I hold him responsible? He will not be responsible for that. That's what we have done in the variance analysis. We will have to comment saying that in the scenario 1 material got wasted, the inefficiency of material usage would lie on the production manager. The sales manager cannot be held responsible for the same. Hence the sales margin volume variance was considered 0. You'll have in this problem, the part 1 which is a detailed calculation was a 12 mark and part B which is a small answer was 8 marks. Institute had categorized it as 12 plus 8. So 8 marks was given for comment on efficiency and responsibility of the sales manager for not. He is not responsible. In net the answer is I cannot hold him responsible for this part because it's not his duty to use the resources properly. His duty is to sell the products which have been produced by the company. Demand is there in the production guys. See, it's what gets sold finally is a combination of two factors, whether you have demand in the market and whether you can produce it. If you have demand in the market but cannot produce it, I cannot tell the salesman why are you not selling it. Demand is there in the market but you are not able to sell it. Second scenario, demand is not there but you have capacity in the company. If capacity is there and you are not able to sell it, who is responsible? That is his role, no? What is the role of a salesman? The role of the salesman is to sell the product. He has been told to sell 2,000 units. Now, I tell you that you have to sell 2,000 units. What is your role? You will have to get the demand for 2,000 units. You have struggled hard and got the demand and I say I don't have production capacity. Then you will not be happy with it because you are doing your role but I say I don't have production capacity. That's what happened in scenario 1. You came to me with saying that boss, I'm ready, customer is there, give him the product, and the production manager says we have wasted the material, we cannot sell it. And now at the end of the year I say SMVV 11,200. The sales manager will get really irritated about it. He'll say, boss, why are you making me responsible when I am ready to sell the product? Your production guy is not giving me the product. Scenario 2, what happened is, he went to the market, he got demand only for 1,800, he sold it. And he asked that, can you give me 200 more units, I'll try and sell it. The production guy says, we cannot give you 200 units, we can give you only 150 units. Because we have already wasted labor, I can give you 150 units. He says, okay, produce when I tell you, don't produce now, wait for me. I went to the market, I could not find the demand for 150 units. Now I cannot tell the sales guy, boss, you have wasted a demand of 200 units. He is responsible only for 150. Third scenario, the salesman is told, boss, you tell me what units you want, we will give it to you. You want 2,000, we'll give it to you. You want 10,000, we'll give it to you. And he is not in a position to find the demand. So he is responsible for the entire 200. See, the net, what does standard costing do is who is responsible for what? There is every variance, somebody has to be responsible. Now in scenario 1, if I put SMVV of 11,200, which is your conventional method, and tell the sales guy you are inefficient, he will get highly irritated. He will say, boss, why are you even telling me I am not selling the product? Is your production guy ready to produce it? He is not ready to produce it. So where is the question of me selling it? So the final thing is all these variances will make someone responsible for it. Someone has to be penalized for it or rewarded for it. And I cannot penalize the salesman in scenario B1. Scenario A1, sorry, yeah, whatever is that. Scenario B1. Scenario B2, partly responsible, partly not responsible. B3 entirely responsible. Clear? Any doubts on this?